is today a bit of a pause day in an otherwise uptrending market, or do you believe now we are getting close to cautious zones?
Hi, Niraj. First of all, very good afternoon to you. Hi, Aditya. Well, I think we've passed that getting into the cautious zone bit for a while now, we're deep into cautious territory. But that said, the markets are trending higher, so you've got to respect that. From my perspective, my suggestion for anyone who's a positional trader would be to stay out of the markets. Nifty, Bank Nifty. Uh, Purely, and especially if you're considering a fresh long trade, because as I mentioned in the FNO show as well, with Samina, which is that look at the risk reward ratio. An upside from here could be 500 points, maybe 700 points, but a downside, if there were a trigger, then you could be staring at anywhere from 2000 to 2500 points, something in 8 to 10% kind of a correction. I mean, that's the kind of territory we are in. So that's from a positional standpoint. That said, from very near-term perspectives, the Nifty 24,500, 24,600, every 100 points that the Nifty moves up, the put bases also keep going higher. So it gets a little difficult to stay out if you have an existing position. So my suggestion for a new position, stay out of the indices, focus on stock. If you have an existing position on the Nifty or the Bank Nifty, you could continue holding on, but have a very strict stop loss and risk management in place.
Okay. So if that is actually, before I take your picks, Kush, let me ask Aditya as well. Aditya, if you were wearing a hat of somebody who does tactical trades in addition to investing, would you stay on the sidelines ahead of the budget, or are you still going out and taking bets?
Niraj, the best way to invest in the market is to stay invested, because you never know, the market could even run higher from here if the government gives a fillip to the middle class. So in our opinion, we should stay on as low cash as possible. 10 to 15% cash is what we are holding as well, and rest of it is invested in very high quality companies. The only check that you need to do is you need to check the valuations of the underlying companies that you are holding, and if you feel there is sort of a tulip mania that is going on in your basket, then you need to profit book. For example, some of the PSU companies, we've talked about companies like Irada, where valuations are extremely aggressive. There, people need to profit book. Otherwise, you need to stay invested in the market.
Okay, so that's Aditya. That's an excellent overview from a long term. Best way to stay invested is invested. 100% agree. But can you give us some insight for our viewers right now who are watching and wondering what to do? So let me give you a specific example. Let's pull up Jupiter Wagons. Getting hammered today in afternoon trade. Everyone's excited. You might have the highest ever railway budget capex this time. Would this be a bet you'd take ahead of 23rd of July?
Absolutely not, Tamanna. We've seen all of railway stocks, not only Jupiter Wagon, we've seen Titagarh Wagons, we've seen IRFC, we've seen RVNL rise spectacularly over the last 1.5 years. Of course, the railway story is here to stay for the next 5-10 years. However, a lot of these earnings that are going to come about have already been priced in. Not to say that these stocks won't do well. These stocks will definitely do well over a period of 5 to 10 years. However, in the near term, they might undergo a time correction where some of them could also hit a lower circuit and give no exit to their investors. So as I said, there's a little bit of tulip mania going on the railways counters as well as defense counters. You need to check out the valuation of these companies and see where you need to profit book. I certainly would not take a bet either for the budget play per se on railway stocks and defense stocks, because we already know the government is going to spend massively on the railway side of it as well as defense side of it. So it is better to stay cautious in both of these deals.
Okay. Yeah, well, but Kush, do the railway stocks feature in the list of your stock ideas today, or are you looking at something else?
Neeraj, they haven't for a while. In fact, I agree with Aditya. I think I'm missing Samina here, where, Samina and I, we've had this conversation time and time again. This is just perhaps a momentum play for those who are already invested to stay on. Let me just add quickly to something what even, Aditya mentioned. See, in the past, what happened is that, these stocks have hit, let's say an RVNL, for example. In this year alone, RVNL has hit an RSI of 80 plus twice. One was when the PSU announcement, I think, took place in the parliament, earlier this year, and then, and then once again during the, election result. After both the occasions, the stock dipped anywhere from 10 to 30%. Now that said, while today the stock is higher from both these levels and significantly higher, the waiting game there was a lot longer. So from up until early Jan to mid May, the stock didn't go anywhere, and thereafter for about a month, the stock really took. Took a while to actually come to new highs. So that's the point. These stories are here to stay, but it's just that you don't want to get stuck at these levels. So no fresh entries recommended even now. The kind of moves that you're seeing in JWL is perhaps a precursor. Perhaps it might turn around. But then these guys, these stocks, if they do fall another 20-25% from here also, it's not really as surprising. In fact, that will perhaps be a good entry point.
What are your picks, Kush?
Sure, Tamanna. So while I will share my picks in a bit. Just a quick update on Colgate, Palmolive, and Newland Labs. We've had the discussion on this. I think just yesterday. Oh no, it was on Friday. Both these stocks have hit their target, moving higher. My suggestion, if anyone bought these stocks after hearing our discussion, ride on. The momentum is still suggesting that these stocks can move higher. So an update on Colgate and Newland Labs. Now for today, the first stock that I have is CAMS. This stock is now trading close to lifetime highs. Yesterday hit a lifetime high, consolidated, and then moving up again. So for a positional target of 44.40, you could get into CAMS. 4090 is your stop loss, and I think after a long time, I have a short position, which is on Tata Steel. Again, during midday, we had a discussion around this. The stock was at 169. Our short targets were 166 and 163. Closer to the first target, you could perhaps still create a short position for 163. Keep your stop losses just above 170.
Okay.